Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Monday, July 10th, 2023. Before I click on the charts, I just want to encourage you to please click like, subscribe, share the content with friends and colleagues if you would, and check out wickedstocks.com where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis in the Triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves on those underlying stocks. That entire package that I just mentioned, $47 a month, and you get a 5-day free trial at the very beginning. So if you don't like it within 5 days, you can bail out for no cost whatsoever. Check out wickedstocks.com. On to the charts. This is a weekly bar chart of Tesla. You're familiar with this if you've been watching it for the last few months. We did 6 weeks ago close above this descending 18-month channel top at 191.39 this week. Our initial midterm target was and still is, and we've actually met the objective at 284.01. Although over the next full year or less, I am anticipating, now there's a lot going on this chart. I should create another chart that actually is a little bit more sensical like this one, where, not only are we expecting 284.01, which we've already reached, but also this 414.49 all-time high that goes back to late 21. If you can imagine a line going across here, that is in reach by the end of the year. It's just that in the interim, we could spend a month or two falling back into the 190s perhaps, at which point I would anticipate that to be a pretty good buy opportunity long term. So for most of you, I think are watching this for the nearer term outlook. So 284.01, still respectable resistance. This formation has performed a pretty good job in containing buying pressure so far over the last few weeks. You can see it here on the daily chart. Yes, we did close above it one day last week, but not by the required 1% margin, which you can see here. 286.85 is our 1% threshold now. That's against 284.01. So it is 286.85 is the magic number this week. If we close above 284.01 by a 1% margin, 286.85 or higher, then we have a meaningful buy signal. Now, that could be on a daily basis, certainly actionable, but I kind of label that as a tentative buy signal. I really like to see the market settle the week itself out Friday, closing at 286.85 or higher. And under that scenario, I expect the 313.60 to 314.66 region, this August 22 high area, within probably 2 to 3 weeks. And by the end of the year or within 3 to 5 months, the 414.49 all-time high. But until then, as I've been saying, we can top out here at 284.01 and fall back into the 190s over the next month or two. We do not have a sell signal at play right now. I will mention, though, that I don't have it shown here as a horizontal line, but last Friday we did close just below the low of the high, and that is at 275.11 level. I did reduce it to an intraday level only. We are heavy below it. We can test 267.61 today. So that is sort of the dynamic for the day. Opening below 275.11, we'll keep 267.61 in reach intraday where we can bottom out on an intraday basis, possibly for the day itself. Overall, holding below, I've got 282.18, which is the daily channel top. 284.01 is the weekly channel top. Holding below this low to mid 280s, I do see the 248.11 level as likely still over the next couple of weeks. On the way down today, if we break 267.61, 262.48 in reach where a daily low can be placed. 67.61, 62.48, nothing more than downside Fibonacci levels over the last couple of weeks extremes. We can bottom out for the day at 262.48. That would be right about here. And if we close below 262.48, I would expect within several days, Wednesday, Thursday of this week, this 248.11 formation, which I consider once again a 1 to 2 week target to the downside as long as we continue trading below 282.18. 248.11. So that is the setup right now, still is. As we continue testing the low to mid 280s, you can reach for 248, 250 out of the money puts that don't don't expire for at least a couple of weeks. If that is your trading sort of time horizon, your 1 to 2 week swing trade, you could also just play the short side of the stock, being short the stock down to 248.11, where you could actually reverse and go long. You could trade inside this zone for the next few weeks, perhaps. And if we do close below 248.11, then yes, I am expecting the channel bottom at 187.46 within about 3 to 5 weeks. So that's why I call it a couple of months, because we could spend a few weeks trading inside of this area. And if we close below 248.11, I think that clearly indicates the 187.46 formation. Now, as we continue testing the low to mid 280s, this important, meaningful midterm ceiling of resistance, you could also reach for 190, 192 out of the money puts that don't expire for at least 3 months. You want to go further out than the actual time frame objective, just so you can eliminate the time decay element out of the option premium. And the further out you go, the more expensive, but the more bang for your buck you get. I don't have any problem buying 190 out of the money puts that don't expire for at least 6 months. It's going to be more expensive, but you will get more bang for your buck on the way down. If you've done nothing and we were to happen, say by the end of this week or in the next couple of weeks, to close below 240.11, those out of the money puts will be more expensive, but you've got a little bit more, I would call it a clear-cut sell signal, a little bit more reliability to the downside once or if we close below 240.11. Now for the upside, I'll mention it one more time. Not only above 282.18, but I would like to see a daily settlement at 286.85 or higher. Once again, that is the 1% violation of 284.01. Even if it happens today on Monday, if we close at 286.85, that is an actionable buy signal. At the very least, if you've been playing the short side up to this point, and maybe you're long out of the money puts, maybe you're short the stock itself, and we happen to close at 286.85 or higher today, I would recommend covering that short position, whatever that is, and consider going long. Long could be buying 313, 314 out of the money calls that don't expire for at least, I would go a month out on this. And overall, 414.49 becomes our 3 to 5 month target. I think we could see meaningful price acceleration to the upside if we close above 284.01 by that 1% margin of 286.85 or higher. Now, yes, closing at 284.50 is a buy signal, but really it is the 1% threshold that I find to be more reliable. Once again, I'll use the rubber band analogy. Closing at 284, say 284.20 or 284.30 is still the mere stretching of the rubber band. It snaps to the upside once we get that 1% settlement this week at 286.85 or higher. And then I would expect 295.05 within this week or within 3 to 5 days, the 313.60 to 314.66 region within 2 to 3 weeks, where we can place a weekly high, possibly top out into August trade and fall back to the 284.01 channel top. But closing above 284.01, this then becomes meaningful support as we move into the fourth quarter, which begins, of course, October 1st. So we could rally in here, and any retracements back to this formation are considered meaningful buy opportunities on the way up to 414.49 by the end of the year. But none of that has happened yet. And, I'll just take you back to this chart. This pretty much says it all for the week and the next couple of weeks. Holding below 282.18, we'll keep 248.11 in reach over the next couple of weeks. And that settlement below 248.11 is our significant go with sell signal into August trade, then anticipating the 190s within probably 3 to 5 weeks. Back to the day itself, 275.11 intraday resistance. If we open below it, it can contain intraday buying pressures, below which 267.61 in reach. If we open above 275.11, the 282.18 level in reach, likely part of a range of weekly resistance up to 284.01, able to contain buying through July into August trade, and below which the market remains susceptible to falling back into the lower 190s over the next couple of months. I'm going to leave it at that for Monday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com.